Okay, let's talk about something you might not even know exists. There's this little corner of the tax code where you might have literally overpaid the government. It's called excess Social Security tax, and we're going to break down exactly how to figure out if you're owed a refund, and more importantly, how to get that money back.
So this is the big question right here. If your answer is yes, you really need to listen up. And look, this isn't about your boss messing up or anything like that. It's just a quirk in how the payroll system works. Since your employers don't talk to each other, you can easily end up overpaying without anyone noticing. It happens all the time to people who switch jobs mid-year or work a couple of different gigs.
So how does this even happen? Well, it all comes down to this thing called the Social Security wage base. The easiest way to think about it is like a tax ceiling. The law says you only pay the 6.2% Social Security tax on your income up to a certain point each year. Once you hit that ceiling, that tax is supposed to just stop. And for the 2025 tax year, the return you'll be filing in 2026, that magic number, that ceiling, is $176,100. Every single dollar you earn above that amount is not supposed to have Social Security tax taken out. This number creeps up every year, but for our purposes today, this is the one that matters. And here is where the problem starts. It's like a blind spot in the system. Your employer's payroll departments operate in their own little bubbles. The company you work for in the morning has no idea what the company you work for at night is paying you. It's this total lack of coordination that opens the door for an overpayment. All right, to really get this, let's make it super clear. We're going to walk through a quick example with a fictional employee we'll call Jordan. This will show you exactly how this plays out in the real world. So check out Jordan's W-2s, 2 great jobs in 1 year. Now look, each company did exactly what they were supposed to do. They saw Jordan's income, and they withheld the maximum possible Social Security tax, which is $10,918. The problem? Both of them did it. Okay, let's do the math here. When you add up the tax withheld from both jobs, holy cow, Jordan paid over $21,000. But remember, the legal limit for the entire year was only half of that. That means Jordan accidentally gave the government an extra $10,918. That's their money. And here's the thing you absolutely have to know. The IRS is not going to just send you this money back automatically. No way. They're not looking for this for you. It is 100% on you, the taxpayer, to spot the overpayment and officially ask to get your money back. So, how do you ask for it? Let's talk about the most common way to get that refund. This is the route for pretty much anyone like Jordan who overpaid simply because they had more than one employer. The official fix is actually pretty slick. You claim this overpayment as a tax credit directly on your annual 1040 tax return. It goes on a specific form called Schedule 3, which just hooks right into the main form. This basically turns that accidental overpayment into a very powerful credit. And this is the best part. It's a refundable credit. That's not just some fancy tax term. It means it's treated like cold, hard cash. Even if you don't owe a single dime in income tax for the year, the government will still cut you a check for the full amount you overpaid. So where exactly does this number go? It has its own special spot, line 11 on Schedule 3. Now, if you're using tax software, it should catch this for you, but honestly, knowing where it's supposed to be, that lets you double-check and make sure you're not leaving money on the table. Okay, but what if you only had one job, and they just made a mistake and took out way too much? Well, that's a whole different ballgame, and you have to follow a completely different set of rules to get your refund. Think of this as your roadmap, because taking the wrong turn here means your claim just gets denied. It's pretty simple. If the overpayment happened because of multiple employers, you use Schedule 3 on your tax return. If it was just one employer who made a mistake, you have to go a different route entirely. So here's the deal with that single employer error. The IRS doesn't see it as a tax credit thing for your 1040. They see it as an administrative issue between you and your boss. So step 1 is always to go back to your employer and ask them to fix it. Only if they can't or won't, do you then go to the IRS with a separate form, Form 843. All right, let's get into some of the trickier situations. If you're married or happen to work for the railroad, there are a few extra wrinkles you've got to know about. This is a huge one for married couples who file a joint return. You absolutely cannot pool your incomes or your tax withholdings together to figure this out. You have to look at each person as an individual. You calculate your potential overpayment, and your spouse calculates theirs. They're totally independent. And man, it gets even weirder if you're in what's called a community property state. Think Texas, California, Arizona, places like that. And you decide to file separate returns. For income tax, you normally split all your community income 50-50. But for this specific credit, nope. That rule gets thrown out the window. The credit stays 100% with the spouse who actually earned the wages. And last but not least, a quick word for all the railroad employees out there. Your retirement system, which is governed by something called the RRTA, is kind of like Social Security's cousin. It's got two parts, Tier 1 and Tier 2, and they're treated differently for this refund. Here's the key difference. Any excess you paid on your Tier 1 tax, that gets handled just like Social Security, on Schedule 3. But, and this is a big but, if you overpaid on your Tier 2 tax, you cannot use Schedule 3. You have to file that separate Form 843, even if you had a dozen employers. Okay, let's wrap this all up with a final checklist. This is everything you need to remember to make sure you get every single dollar that you're owed. So here's your game plan. Step 1, grab all your W-2s from the year and add up the numbers in box 4. Step 2, compare that grand total to the annual max. Step 3, pick the right path. Schedule 3 for multiple jobs, Form 843 for a single employer's mistake. And the biggest takeaway of all, this refund is not automatic. You have to go get it. Look, at the end of the day, it's your money. You earned it, and the government has a clear process for you to get it back. Now you know the rules, you know where to look. The only question left is, are you going to claim it?